Hey everybody, good evening here, Sunday, March 5th. Doing a quick weekly bias market report update. I'm going to try to keep this as quick and short as possible. Jumping into the S&P 500 futures chart, like always, we had a really nice, powerful bounce on Friday to close the week last week, following a little hammer candle slash bullish engulfing candle. So an engulfing candle is when the real body of the previous candle is contained within the real body of the following candle, and the following candle is moving to the upside. So you can see here the high and low of the previous candle. It was contained within this. Then we got nice follow through on Friday that drove right back up into our declining 20 period SMA. I would have loved it if this had not rallied so hard on Friday. It makes entries on the S&P 500 a little bit more challenging from a risk to reward perspective. But if we take this out to the weekly chart, you'll see just a really nice bottoming pattern here, going from higher highs to lower lows, lower high, lower lows, continuing that pattern down until our ultimate low here, around 3,500 back in mid-October. And since then, we have reversed and we have now been setting higher highs and higher lows, higher highs and higher lows. This is now this week's candle as of a few hours ago. So obviously it is just beginning, but we do have this confirmation to the upside basically as of right now. The high of our previous candle was 4,053. We are currently at 4,060.25. So technically triggering on the S&P 500 here. Really, if you want to play the actual S&P, it's only a couple dollars underneath this SMA. The 20 period SMA is currently at 4,063 and 73 cents. So trigger over 4,064 would make some sense here. And playing to the upside, targeting back up to the previous pivot high up here around 4,200. So we have a solid 125, 130 points we could potentially run there. Ideally, we would want stops to be down below the lows down here, below support. You could get away with putting something just shy of below 4,000 to be able to get the proper 2-to-1 risk to reward ratio. And that would also get us underneath this diagonal resistance. So I kind of like the idea of having a stop loss down around maybe 39.90. Moving on to the NASDAQ, very similar pattern. We had this nice big broad base for a long time, had a nice big uptrend on the daily trend, just like the S&P. We did go a little bit deeper on the retrace than I would have ideally liked. But again, if we kick it out to the weekly chart, we see breaking back above all of the moving averages. The 9 EMA on the weekly chart is just now crossing back above the 50, and both the 9 EMA and 20 SMA are both curling up and smiling at us, which is a really good sign. Again, targeting back up to previous pivot highs, so somewhere around 13,000. We're currently trading just shy of 12,070. So nice little potential trade there. Try to probably stop underneath the 9 EMA on the daily chart if you're wanting to play that. Moving on to Russell 2000, basically the exact same thing. I actually like this chart a little bit more. We still have a really good percentage to run. We could run another 4.3% basically, or $83 back up to the previous pivot high. Again, get our stops down if we want to be conservative all the way down below the 50 period moving average, or we could stop underneath the 9 EMA to increase the risk to reward perspective there. I really like this zone of support and these lower wicks on these candles right on the 50 period moving average as the bulls and bears kind of fought out which direction they wanted to play. And again, kicking this out to a weekly chart, you see just this nice move higher, nice orderly weekly retracement back down into the moving averages and previous support, and now signaling a move higher again. So basically all three of these indexes look really, really good. All three of them look playable to me, depending on where you want to put your stops and how tight of a stop loss you want to do. For this situation, you might consider doing, if you're familiar with options, bull call spreads or something like that that has limited risk, but it's still directional to the upside. And final index, the Dow Jones, not much to see here. We're still in a fairly significant consolidation zone, basically going back the last 6 months here. And I don't see much of anything in terms of a directional play here. It's just kind of chopping sideways and then a little bit of fading action. So not much to see on the Dow Jones. Kicking in to look at individual stocks. I have a handful of stocks that I am really enjoying the setups on, and basically all of these are going to look almost identical. They're either going to be breakouts to, this one's a cup and handle breakout. So you see the cup here, handle here, resistance around 155, and then breaking higher back above all the moving averages. So like ABBV. Citigroup had a little bit of a consolidation, little double bottom here, kind of a triangle or pennant formation here, which is a bullish continuation pattern. And then now that is breaking out and moving higher. And looks like this has room to run. I'd say target 155 and change, and target 2 probably getting up closer to about 60. CTLT on the weekly chart, you can see has probably room to run another $5 or $6. On the daily chart, we're staring right at that 200 period moving average that will likely slow it down, but I doubt it's going to stop it. I'd actually probably be targeting up here around the 82 mark. So like that setup. ETN breaking out, had a nice little high base situation here, and finally breaking out above that looks good to me. Fastenal probably ran a little bit too much already off the lows here, and it's a little choppy. If we kick it out to a weekly chart, you'll see why I have it on my report right now, because it is breaking higher and looking like it wants to retest these highs, if not push up a little higher to about 150, or excuse me, 57. FCX, same thing on weekly chart. Really nice little pattern there. IWM is just the ETF version of the Russell 2000s. Obviously, that looks good. JP Morgan breaking out. Really like that consolidation pattern. A trigger above 144.34 based on ATR rules, average true range. So you just want to have a little bit of a buffer in price. So instead of 144.34, maybe 145 or 144.85, somewhere right in there would be a good trigger in. LRCX, nice little base here forming on the rising 50, looking to have that breakout of about 498, room to run back up to about 550. Like that trade, but it's an expensive stock, so having to probably do some kind of bull call spread on that one if you were familiar with that option strategy again. Meta, nice pattern, consolidated here, going all the way back to previous resistance. Like the look of that. Weekly chart, I mean, it has room to run probably back up to around 225, 230. So lots of room to run to the upside and total open air on the daily chart. So I really like this meta trade heading up to 220, 225, 230, somewhere right in there. Target 1, maybe you scale out a little bit around 200s. You get a 15-point move there, and then let the rest run, or just tighten your stop up a little bit once we get into that 200 mark. Triple Q's ETF for the NASDAQ, so same thing as the NASDAQ futures chart. Shopify here, really like this rounded bottom, big consolidation zone, faded up a little bit, broke through moving average, now has come back to retest and looking to push higher. Targeting previous pivot high. Once again, you guys are probably going to see some consistency here in terms of what you are targeting. Usually target 1 is the previous highs on a bullish retracement, and that actually has 26% that it could run up to that. Has about a $2.57 ATR, so it actually only take 5 or 6 days potentially for that to run back up there. So like that play on Shopify. Spider ETF, same thing as the S&P 500 futures. SQ, Block Incorporated, really like this, especially on the weekly chart. Again, very similar to Shopify, just big rounding bottom, breaking out above the 50, coming back and retesting, moving higher, probably targeting up to about 93. SWKS, Skyworks, really nice on the weekly chart here. Hammer candle, technically on the weekly chart, we do need a little bit more confirmations. We'd be looking for confirmation above the high of 115.95. On the daily chart, however, we did get confirmation on Friday. So conservative entry, you could go ahead and take over the high of Friday's candle here. More conservative entry, waiting for it to break above the 20 SMA, somewhere around 115.70. Last two, home builders ETF, really like this retracement back into the 50 and previous resistance, breaking higher, love that. And XLK, also love that. On deck for our economic events, not really anything on Monday. Tuesday and Wednesday, our Fed Chair Jay Powell will be testifying. So there's probably going to be some fairly significant volatility around his news releases. Also have non-farm roll employment change. So that'll be reporting on Wednesday. And then on Friday, we have unemployment rate, and that has been key for indicating where inflation might be going recently, the sticking power of wage inflation. So those are just kind of a few things to look for Tuesday, Wednesday, and Friday. Anyways, have a great trading week, guys. Obviously, the lean has to be bullish right now based on the major market indexes. Trade smart, make sure you're using stop losses, especially because we do have a decent amount of economic data being released again, Jay Powell testifying, which can always move the market, but really liking a lot of these setups. And it looks like, the Bulls are back in charge and they're wanting to make another push. So you got to trade what you see. Don't overthink things. Don't get caught up on we're going to be bearish at some point because the economic data is still not that great. You have to trade what you see in the charts. The charts are the end all be all because that is what makes you money. The price goes up, the price goes down, one way or the other. So anyways, trade the charts you see, try to remove the emotion from it, and just be logical and systematical in your approach. Anyways, take care, guys. Have a good trading week. Bye.